is Wednesday, hump day, October 2nd. Had a fun morning. You know, when your dog turns around and poops on the carpet after pooping outside. It's always a fun morning when that happens. Effing Penny. We got a new Alpha Pick yesterday. And so Alpha Picks, if you didn't know, Alpha Picks is a curated portfolio. You can get to it from the link tree. The link is down below. linktr.ee/daily stock pick. It is on the screen the entire time. So anything that you want a reference to, you can go to that link and just get it. If it's a chart, you can go to the newsletter. If it's a service, you can go to Linktree and get it. But Alpha Picks, this third one, Alpha Picks, want to beat the S&P. That is the third one, okay? This is a curated portfolio. You get a pick on the 1st, you get a pick on the 15th. Look at the performance, okay? They had a new pick yesterday. Turns out it's not a new pick. It is a reiteration. So they double down and buy more. Okay, this particular stock rallying more than 300% since May 15th, 2023, when they initially added it to the Alpha Picks portfolio on strength in new orders and $1.3 billion backlog. They say, hey, this is our pick, buy it again. A strategic supplier and manufacturer of custom engineered electrical infrastructure with a legacy of 75 plus years. It's great. Revenues of over $288 million in Q3 were 50% higher year over year. 50% higher. Positive analyst revisions, a long-term capital growth plan. Market cap of $623 million. So it's not super small cap. Upon Alpha Pick's introduction, today it's a $2.63 billion market cap. It wasn't a small cap. It's doubled. Alpha Picks portfolio total return continues to outperform the S&P 500, 139%. Again, Alpha Picks, 139%. So there are a ton of stocks in here that are fantastic. I think it's like a portfolio of 20. The key point is they tell you when to sell. And that's the major difference between a lot of these portfolios like Motley Fool and others. Alpha Picks is a curated portfolio. So if you're new to the fundamental game and you want a curated portfolio of things like Sprouts, SMCI they got into in 2022, picked on November 15th, 2022, go and look at that chart. They're still holding it, but there are a ton of others, okay? With 8 Alpha Picks soaring more than 100% since their addition. It's a great portfolio, so go and look at it. They just had a new one yesterday. What you get is you get an email, or you can go into, when you're in Seeking Alpha, you get in these investing groups, you get Alpha Picks added to it. I do not have any other investing groups. In fact, Seeking Alpha keeps begging me, can you promote more of our investing groups? And I take a look at them and I say no. This is the one that I think is the best fit for it. And the reason is because I just don't want to lead you into somebody that actually doesn't wind up outperforming VOO or QQQ. But Alpha Picks does. You know what else does? The core portfolio. I went into this yesterday. I made all the changes. We added Berkshire. We added Dell. We took out SMCI. We took out Boeing. We made those changes. If you subscribe to it, and again, this is free. This doesn't cost you. Unlike Alpha Picks, the Savvy Trader link to my core portfolio is 100% free. And it beats VOO and it beats QQQ. Now, this isn't a curated portfolio. I do tell you when to buy and sell, but I don't manage the portfolio like Alpha Picks does. I add 100 shares of each stock when it enters. And if it splits like SMCI did, I sell 900 shares. I sold 900 shares of NVDA when it split 10 for 1. I sold shares of Exxon when it split. There were a couple of others in there that split as well. So I do sell those when they split. Walmart, when it split, I sold shares. Costco, if it ever does split, I'll sell shares. Eli Lilly, if it ever does split, I'll sell shares. That's the only time when I sell shares, either that or when I lose confidence in the stock. But if we go up here and we compare this, again, Alpha Picks, you can look at that one. It's outbeating, it's beating the S&P. This is beating the S&P, okay? Over 1 year, S&P is up 34%. This one's up 45%. But again, I would argue you could do even better than that because it's 34 names. It was 35. I took 3 out, added 2 back in, and I don't do it often. So it's not a great portfolio to actually manage. It is just 35. I don't think you can get hurt in these names. I think at some point in time, the stocks come back. Now, Boeing, we took out. It didn't come back. Tesla is another one that might not come back. Tesla, the average purchase price of this one, $270. We have that significant resistance at $260. But I bought this one, it was a while ago. Let me see. Purchased June 20th, 2023. Okay, that's when the core portfolio started. So that's been in there for a while. But if you want to follow this one, again, on the link tree, it's down here. It is just Savvy Trader. Follow my trades for free. You can follow it for free. I do have a trading portfolio on there as well, which I am going to get a little bit more active on because look at the Qs. Okay, yesterday, 3% down. We've got a lot of things going on. A lot going on right now. We've got the VIX at 19. I said it wanted to be 20. It's at 19. We've got Bitcoin falling 3% down to 60,000. When it gets under 60,000, load up on IBIT and MicroStrategy. Or just go out and buy Bitcoin. Okay? You've got gold at all-time highs. All-time highs. That's a 10-year chart of gold. Look at how it's soaring. Again, the U.S. deficit is at all-time highs. So is gold. It's over the Middle East escalation fears. And there's a lot of, we'll talk about the escalation fears that we can see because there's a lot of it. But why did I post yesterday in the newsletter? Let's go to the newsletter. So let's go to Linktree and we'll just click the newsletter. And I got some questions about why, do you trade off of the quarterly charts? No. The point I was making yesterday is the eighth wonder of the world is compounding. We're in a bull market. Short-term pullbacks like this are opportunities. They should be treated as opportunities. Buy the dip. Okay? I'm going to include my weekly stock pick. He just posted this yesterday. We wrapped up the third quarter. Getting a perfect time to review this year's best and worst performers in the S&P. Top performers, VST, NVDA, CEG, Palantir, and GEV. Worst performers, Walgreen Boots, Intel. Everybody says Intel's due for a bounce. It's not. Dollar Tree. It's not. Lululemon. It's not. Dexcom. Apple's coming for you, Dexcom. That's it. So why do I post quarterly charts? Because I want to remind you that we are in a bull market. Even though you're in extreme fear, you're looking for short-term opportunities. You're not looking to get out of your long-term portfolio. That's why I posted quarterly charts. It's as simple as that. We're going to close the VIX. We're going to close the Bitcoin. We're going to close gold. Okay? The other thing I want to point out is that Tom Lee this morning, he was on CNBC. Okay? This is it. This is his entire clip. I think we're still in the midst of a very tricky period. If we get a dip, I think you want to buy the dip because the setup into year-end has tailwinds. What's his year-end target? He said at some point in time, between now and year-end, we will hit 6K on the S&P. Okay? That means when we go over here and we look at SPY, okay, let's see what that means. When he says we'll hit 6,000 on the S&P, that means SPY will be at 600. You're at 568 right now. 567.40. That's pretty good upside right there. Pretty good upside for just a few months if you want to get it. I have here the all-time highs at 565. We've gone past that. Now this should be used as a support. If we're going to go higher, it may be used as support. Support may be down here between the 550 and 560 area. I'm not identifying that one because, we don't know exactly where it is. You may be down here right at 550 because that was right at the point where volume weighted average price is right there as well. If you pull it back there, that's where people are buying. It could be there. But again, if you want to just buy now and endure the dip, we're in a strong bull market, because look at the quarterly chart of this. If you go to quarterly, we still have confirmation. We're at the top of the Bollinger Band. Could you come down? Absolutely. But the tailwinds are there. So I think it's interesting. I think it really is. Now, I want to show you this. I want to build this for you in Seeking Alpha, because KWeb is up huge again. It's up 6.6%. It was up 6% yesterday. It's up 6% now in pre-market. But when I go to it, and I've been telling people, FXI, I need to change this in my notes. It auto-corrected it to fix. But FXI, if we go to select symbols, we're going to take the S&P out, and we're going to put in FXI, because that's the large cap China ETF. And you can look at this one. Now, if we just look at this one for 1 year, KWeb's up 31%, FXI's 25%. So FXI may have a catch-up year to date. You look at it, FXI's up 37%, KWeb's only up 33%. 6 month, you can say FXI's up 35%. You go to 1 month, and it changes significantly. FXI is up 27%, KWeb is up 41% in 1 month. That's crazy, crazy. Now, you can do your own analysis of this. Here's a great article. The top 15 China-focused ETFs per Seeking Alpha quant metrics. Okay, per the quant. The quant has been shown to outperform the market. The quant rates things on 5 sectors. Okay, it rates it on 5 sectors. And we'll go over it. But if you want the quant, you need Seeking Alpha Premium. And my link on Linktree saves you $30 off of that premium membership. And again, these are the top 15 China stocks. And Tom Lee pointed it out this morning, even on his interview. You know, does China have more room to run? They're 7,000 basis points below, or 700 basis points, I'm not exactly sure, below the U.S. as far as the economy growing. So even if they were to 50%, from here, they're still underperforming the U.S. Now, mind you, China, and I said this yesterday, China is pouring money into a bad economy. So it doesn't mean that, hey, all is good in China. They're pouring money into a bad economy. And speaking of China, I don't think Tesla has come out. Let me see if they've come out with their numbers yet. Let's see if they're reported. I don't think they are. Tesla dips after a slight miss with Q3 deliveries. So they did miss with deliveries. The numbers were just coming out as I was putting this together. They weren't out. This is interesting because they missed with deliveries. Let me read this. Delivered 443,956 vehicles in Q2 and 435,000 in Q3 last year. They reported 462 in Q3. So that is up year over year. So in pre-market, they're down 3%. Again, from a chart standpoint, I said this. I said this is going to be a resistance level at 260. Hopefully you got out at 260, or you trimmed, or you did something. NIO and other China rivals had record numbers in quarterly deliveries. But Tesla, they're kind of weak. I mean, it doesn't look great that they're coming in weak. Shares of Tesla dips. Looking ahead, Tesla will have a high-profile robo-taxi event, Re-Robot at Warner Brothers Studios in Burbank on October 10th. That's 8 days away. The event was scheduled for August 8th. I don't know what they're going to come in with. Honestly, I just don't know what they're going to come in. Let me reset Trendspider a little bit. It's hung up on this one. We're going to go to Tesla, and we're going to look at the 4-hour algorithm, and I'm going to show you the resistance level that I highlighted at 260. It's pretty clear. I mean, it's bounced off there 4 or 5 times, I think. Maybe even 6. Let's see. Let's pull this back, and we'll look at this one since it was, and it's a long time trend line here. It even goes back there. But you've got 1, 2, 3, 4, 5. This is the 6th time. The 6th time in the last year that it's hit that 260 level and bounced off it and come down. Now, the algorithm still has you in. Probably will get you out today. But their earnings are coming up October 16th. Again, they have the robo-taxi on October 10th. So there's a lot of catalysts that go into this. the delivery numbers don't look great. If it misses Wall Street estimates, now, if they had more Cybertruck deliveries, maybe the revenues are higher because that's a hugely profitable, not profitable, but a huge revenue boost for them. That's a huge truck. I mean, it is what it is. I think it's interesting. Am I getting into this one? Not really. Pivotal starts bullish. Pivotal Research, I guess, started tech giants, Google and Meta, with a buy rating. They Google price target of $215, an upside of 30%. Meta, they put a $780 price target on, upside of 37%. Both of those I'm big on. Both of those should be in any good long-term portfolio. You can see there's a nice gap up here to 183 on Google. We have confirmation. We're trading under the 200-day on the 4-hour. The MACD's a little bit high. The RSI, a little bit high. When you go and look at a weekly chart on this one, you still have some strength. 50-day still moving positive. You bounced right off that 50-day. Meta, on the other hand, this one has nothing but strength. It's probably a little bit overbought right now. RSI at 71. MACD is a little bit extended. But again, for long term, if you're looking at a $780 price target, who cares if you're buying at that high level? Again, we all have jobs. We all have different things that take us out. Put it on a watch list and set an alert. It's as simple as that. But Wells Fargo was also one that upped the price target on Meta and Google as well. Intel, NVIDIA, Micron, lead chip sell-off as geopolitical tensions increase. If you haven't heard, Iran sent 200 missiles over to Israel. Israel's Iron Dome blocked them out, but Israel said to respond. Good chip companies like NVIDIA, Qualcomm, they will be back. Taiwan Semi makes all of these chips. So take the dip, buy the dip. Again, do you have opportunities in here? Absolutely. Buy the dip. There's also a port strike going on if you didn't know. And disruptions and delays usually bullish for shipping rates. Here's an article, and it's a podcast. That's what's great about this one. You don't want to listen to me? There's a 30-minute podcast by Jay Mintzmeyer. Okay? He's and it's hosted by Rena Sherbel. And you can just listen to this one. It's on all your platforms. I'll link to it in the newsletter. For the Spotify version, because I like Spotify. Spotify pays me. In fact, they hired me as a consultant. I'm not supposed to talk about it. Okay. Disclosure agreement, but yes. But it's a podcast. And so this is a good one to listen to. If you're interested in trying to play the port closure, like we got a question on YouTube Live yesterday, this is your thing. It could be good for shipping rates because, again, as the ports close, the ships need to stay out there. Ships will charge more money, blah, blah, blah. There's opportunities. Now, say you want to play the Middle East, oil would be the most likely play. All of those that want to play the oil. UCO, remember, UCO is a triple levered bull and SCO is a triple levered bear. So UCO, if oil prices are going to go up, UCO will rise. And we can look at those charts right now. Now, I wouldn't play this in the 4-hour algorithm. I would play this more on a tighter time frame. But ironically, 4-hour algorithm got you in at 2707 on UCO. I think SCO got you in the other day. The algorithms don't work really well. You have to watch your charts on this one. I would never recommend just buying and holding UCO, even though I had a friend who bought it, I think in 2020, held on to it until like 2022 and made a freaking fortune. But I would never say that. If you want to play it, again, oil jumps and it jumped. Here's the thing. OPEC, the head of OPEC yesterday, MDB, I forget his name, but the head of Saudi, warned overproduction and oil going to $50 if the members of OPEC don't abide by the production limits. Today, the OPEC is supporting a price level by cutting production. Okay? The indication is that they could do 18 million barrels more. If Iran all of a sudden gets shut down, that's only 13 million barrels. So they're holding back 18 million barrels. Do the math. There shouldn't be a shortage. And essentially, OPEC is trying to hold that price up. Normally, when Iran invades Israel, oil would be up $15 to $20 per barrel. And that would be an enormous jump. Okay, you're going to have to read a little bit. Middle East war, fears of wider amount of oil continues to gain. I might buy some UCO, to be honest with you, at $27. It might make sense because I don't think this is stopping anytime soon. And I tend to think that OPEC folks will probably drive it up. We are producing more barrels here in this country than we ever have before. But the capacity isn't there to immediately turn on a spigot because we've been producing so much. We did just refill the oil reserves, so there aren't any headwinds where we have to buy more. So there's a large amount of pricing pressure on oil right now because OPEC has cut back that capacity. But if they start to see prices rise, they might just turn on the spigot. So don't expect to, hey, I'm going to go into oil because it's just going to spike. It's not a short squeeze kind of thing. It's not a short squeeze kind of thing. Just understand you can play that one. Commodities are a tough business. You know what's not a tough business? Drugs. Eli Lilly is, you stub your toe, you're going to get a GLP-1. Here, Zepbound, they're looking at it as a health maintenance drug. If there isn't something that's more bullish than something like this, this is going to be aspirin at one point. You know what? You look like you went from a 32 waist to a 33 waist. Hey, here you go. Here you go. It's going to be so easy for doctors to just put this into somebody. It's going to be super, super simple. Eli Lilly is part of the core portfolio. It is one of the big winners in the core portfolio. If we look at this and we just do total return and you look at it, Eli Lilly is up 62% since I added it to the core portfolio, okay? When did I add it to the core portfolio? August 18th of last year. Just about a year ago. It is up 62% since then. And yes, a year ago, this one was super high. Look at the weekly. A year ago in August, let's just go back to August. You were at all-time highs. You were at all-time highs. Again, it doesn't feel good to buy at all-time highs. But with certain stocks, with certain growth, with certain products and good management, you can absolutely buy at all-time highs. Lilly, it's expensive. It's expensive. It's always been expensive. We can take a look at this. We talked about the quant, the 5 factors. Valuation, F. We can go in and look at valuation, okay? The PE, the forward PE, 54. We don't want to pay 50 times earnings for something like Costco. But when you go and look at the PEG ratio, these guys are growing so much. Their PEG ratio, which incorporates growth, is 1.27. Okay, I think Warren Buffett or Peter Lynch, somebody, only likes to buy ones that are under 2. This one's under 2. If we were to go look at Costco with the same kind of thing, okay, the PEG ratio is 5. The forward PEG ratio on Costco is 5. Yes, it's 50 times earnings, but it's not growing like Lilly is growing. And that's what you're paying for with Lilly is the growth. And they not only have the GLP-1, they also have an Alzheimer's drug, which could be a game changer as well. So first factor, valuation. Second factor, growth. It's an A+ because they're growing revenue 31% year over year. Okay. Then you go to profitability, 80% gross profit margin, A+. Then you go to momentum, which momentum, I would argue, is the biggest factor. Now, 3-month performance, you're down 3%. Could it go down? Absolutely. 6-month performance, you're up 16%. Has it run too much? Maybe. But revisions, that's where you count on Wall Street. There's 23 analysts that have covered this in the last 3 months. 23 have bought their earnings per share up. 23 have brought their revenue up. How many down? 0. A+. So that's how you look at a market. Do they have growth? Yes. Is their valuation crazy? Yes. Profitability, they're really good. Momentum, they're really good. Now it's ranked from the quant. The quant ranks at 3.47. Again, the quant beats. What's number 1? AQST, therapeutics. Again, this is pharmaceutical stocks. I'm not an expert in this, but I trust the quant. The Seeking Alpha, look at this one, AQST. It's a market cap of $433 million. There are franchises of Dick's Sporting Goods that actually make more revenue than the market cap of this company. But says it's a strong buy. Up 1 year, 235%. Year to date, this one's up 131%. The quant knows something that I don't know. Now let's talk about earnings, because the Dow is down because Nike earnings was just a shit show. Just a shit show. When they come out and say it's a long road ahead, they pulled guidance, they canceled their investor day, and the stock is still expensive. I was hoping that they would give some guidance. It's down 7%. Again, I was hoping that they would give some guidance, because this is a brand that you want to be in. This is a $100 stock. It wants to be at 100, but the valuation is crazy. Why would I pay 28 times earnings, forward earnings? Okay, when the growth, their growth revenue year over year, 0.28%. They're not growing. And they can blame China all they want, but they're just not growing. It's not a good company to get into. What's the number one? Wolverine Worldwide. I don't even know what they make. WWW. Market cap of 1.38. Is at risk of cutting its dividend. You don't care about dividend. What's the dividend yield? Let's say dividend yield. Dividend yield of 2.3%. Who cares? Who cares if they cut it? It's 2.3%. You're counting on growth. 1 year, it's up 113%. Year to date, it's up 90%. It's the number one in footwear. So Nike is just, for me, I'd stay away from that one. Now let's talk about social requests. Rainier Hensman from the Facebook group. What do you think about Humana long term? It has a huge pullback. It is a top pick on Morningstar today. For an entry, it has to turn around, though. Thanks for your thoughts. He put that in yesterday around noontime. And then what happens today? Humana crashes as members' top-rated Medicare plans drop. It's down 21%. Okay, it's Morningstar top pick as of yesterday. That's where I kind of say, hey, the quants has it. They've had it as a hold. How long have they've had it as a hold since it was trading at 400? That's where the quant comes into play. Is the valuation good? Valuation's okay. I mean, they're not making money, but they're expected to. Growth, it's crappy. 13% year over year, but they're spending a ton of money. They're just not making money. So while their revenues are going up, they're losing money. Profitability, C+. Gross profit margin, 15%. What's the gross profit margin in the sector? 57%. Momentum, horrible momentum. I mean, you want to catch a falling knife? That's what this is. So what do I think of Humana? I trust the quant. It says hold. They've had it as a hold. I don't trust it. And if you're thinking it's a good turnaround story, maybe it was a good turnaround story here in 2024 when it was trading at 322 and went up to like 400. I would argue that 400 probably is a decent, even if you were to look at this pullback back here in January 2020, okay? We're looking at 377. You used it as support there. You used it as support here, kind of bounced up twice, it bounced up, 3 times it bounced up. It kind of broke down, but it bounced back up. Then it came, then it broke. And what happened? It kind of used it as resistance right here. So if you're going to buy at 219, okay, if you're going to want to get into this one at 219, I would argue there's no freaking way I would get into this one at 219. There's a reason United Healthcare is in the core portfolio and Humana is not. But if you want to get into this one at 219, I would say 377 probably isn't a bad play back up, but I wouldn't buy it. Who's to say this one isn't going? When you have membership going down in this company, that's not good for a healthcare company. It's not good at all. Members on top-rated Medicare plans drop. So they cited preliminary 2025 Morningstar, I guess, ratings data. Said that members enrolled in plans rated 4 stars and above reached roughly 1.6 million in 2025, indicating a 94% decline from 2024. What do you think their revenue is going to do when 94% of the people just leave? And maybe they're going to United Healthcare. United Healthcare's up 2% today. There's a reason why that one's down 20%. This one's up 2%. Maybe this one is the beneficiary. I don't know. Maybe Cigna is. But this one, United Healthcare, valuation's a little bit crazy for a managed healthcare company trading at 21 times earnings. The sector's at 21. But, you factor in the growth. The growth's not that great either. It's not that great. Their levered cash flow, they're just not making it. Profitability, though, 23% profit margin. Return on total assets, they're doing pretty well. Again, it's a managed healthcare company. The momentum's holding this one up. Again, if I'm going to go into anything in healthcare, it's not going to be Humana. It's not going to be Cigna. It's going to be the big daddy. It's going to be UNH. But I wouldn't even go into this one. I'm not a healthcare guy. It is in the core portfolio. And mind you, we bought this one at its all-time high. Let's see, where's UNH? We'll sort it by symbol. And we'll go down to UNH. I bought UNH, let's see, it was June 20th, 2023. And I am up, let's see, where's UNH? There it is, 27% since then. I bought, the average purchase price was at $468. And I've said this before, buy this one under 500, sell it over 500. It unfortunately has just taken off. So I don't think that 500 price target remains kind of to be seen. Right now it's at 595. You might have 600 in this one. You definitely have 450 as a support level. You've got a gap here between 519 and 520. If healthcare is going to crash, then that's where you're coming. I just don't see how this particular one crashing. Again, the core portfolio are names that I think are good to hold for the long term. If you look at this, you have no volume in between like 507 and 556. There's no volume there. You go to a weekly, and this one's just, it's run up a little bit too much. Maybe it comes back down to 550 or 530 where that 50-day is trading. The 50-day has been pretty constant. When it's dipped down towards that 50-day, you can buy this one. Again, you want a bottom left to upper right trajectory. Humana, it doesn't have a bottom left to upper right trajectory on a weekly. This one has lost its way. So I would argue it's not a good one. Not a good one at all. I got some nice words, kind words yesterday from Spotify. Fisher says your show is fantastic. The podcast is goldmine for newer investors. I said, thanks for listening. Lou Dog, tell him Gary. I guess I went off on a rant yesterday. My friends say angry Gary is a fun Gary. So I'll just quote my text there. The Costanza comes out in me. To quote Frank Costanza on Festivus, I got a lot of problems with you people. Let's talk about scans. In the core portfolio, Pepsi is the only one that has an actual entry today. Okay, 170.49. Do you want to buy? It's again, this is not going to pop all the way up to 180 in the next week or so. This is one you add for a long-term buy and hold. The algorithm makes you, it's even. You lose 0.2%. You make 1.4 if you buy and hold. I'd argue that Pepsi's a fairly priced stock. It's not the best. It's not the absolute best stock to add to it. It's a buy. Valuation an A. Profitability, look at that, 54% margins. I mean, your 2 liter might shrink down to a 1.5 liter. If you haven't seen Tropicana orange juice, it's come in a smaller bottle now. They're shrinking it, but they're charging the same price. That's what Pepsi does. I mean, Pepsi is just one of those. Coke is probably a better option. We can go and look at Coke versus Pepsi here, select symbols. Coke is in the core portfolio as well. You want to know why? Because I freaking drink Pepsi and Coke. I drink both of them. I love cola. 1 year, Coke's up 29%. Pepsi up 0.61. 3 years, Coke is up 33%. Pepsi's up 13%. Maybe Pepsi has a little catch-up trade here. 5 years, Pepsi's up 26%. Coke is up 33%. You can see Pepsi was outperforming Coke for a very long time, and Coke just caught up. Maybe, Pepsi catches up again. Pepsi, 10-year, up 79%. Coke, 61%. Over 10 years, I don't mind holding both of those because, here's the thing. If you select the metrics, okay, again, the seventh one, eighth wonder of the world, whatever it is compounding. Okay, because look at that. When you add in the dividends over 10 years, 121% for Coke, 139% for Pepsi. So a couple of other ones that crossed up. XLE. Energy is getting a boost, and it's because of the Iran-Israel stuff. But 89 is the cross up there. I think you've got 93 as your it's trading right now at 91. I think you've got 93 as your resistance. If you want a couple of bucks and you want to put it into energy, I don't think it's a bad play right there. XLU, which is the high flyer for the year. This one continues its bull run. Again, we've had several entries that from this $68 price back here in July. You could, 68 to 81 from the July to October. That's huge. Utilities is huge. As the rates fall, utilities become more important. A, because you've got AI power, and B, because you've got dividends that pay on these stocks, and it replaces the bonds, which are actually going down as far as like income. Walter sitting in his rocking chair in the home, he needs income. That's what he's doing. So he's buying utilities. We've got a bunch in the energy list. We got a bunch in the leveraged ETFs, and those are the two spider sectors. All of these things can be found here in the newsletter. The daily newsletter is free. Sign up. I don't know why I don't have more subscribers on this one. You're crazy if you don't. If you listen to this podcast and you're not subscribed, you're nuts. You're out of your mind, because this has everything. You don't need to listen to an hour of me talking. And look, MHO yesterday, Alpha Picks, it's second leading Alpha Pick stock. That's why I got yelled at yesterday. You can't put that in your newsletter. MHO, they want you to subscribe to Alpha Picks. I get it. I mean, nobody likes to steal stuff. But MHO, entry at 166. I said you've got resistance at 172. But it's the second leading stock pick in Alpha Picks over the years. Now, Charter, Autodesk, this is all from yesterday. Today, I will post today's in here. I just went over a couple. There's a lot of energy names: Viper, Venom, Devon, Cord Energy, UCO, that we talked about, has a cross up, COP, LNG, which is liquid natural gas, Cheniere, Sunoco. But it's all going to be down there at the bottom. So sign up for the newsletter. Let us help you grow. If you have any questions, again, you're seeing this 4-hour algorithm. Let's just talk about Tesla real quick, because I want to point out something. I want to point out the 4-hour algorithm, how it works on some stocks that are highly volatile, that are overvalued, okay? And you don't want to stay in because you might lose sleep at night. Let's talk about Tesla, okay? Tesla got you in here at 215. 215. Now, I wouldn't have gotten out at 216. I would have said, hey, we have confirmation. I'm going to hold on to this one. I'm going to put maybe 203 as my stop loss, because that's where the 200-day is. But the 200 is moving positive. The 50-day is moving positive. So I wanted to trade Tesla. Buy it at 215. Have at it. You know why? Because the algorithm over 24.5 months makes you 172%. And you may say, oh my God, that's crazy. Are you in and out of this thing like 9-10 times a day? No. 23 times you have traded this one. Okay. 23 times over 24 months. Now, if you bought and held this one for 24 months, you're down 6.9%. And we talked about how the chart, it's clear on the chart. To me, it's very clear. And Trendspider makes it so easy to put these lines in. Now, visually, if you're looking at this thing, you can see that 260 price point right there. We can bring this down. Okay, this goes all the way back to 2021, to those highs when it first broke out. And you can see it pulled right back to where it broke out. Okay, that was the first time, February 2022. Went right back up to 414. Then where did it pull back to? Just under that. Went back to about 220, 200. Okay, then it shot right back up to 314. Then we lost everything in 2022. And this one went all the way down to $112. 108 was its low. Then it shot up. But look, that old support that was there at about 250, 260, I've had 259 right now. That old support that was there to support that run up to 400 turns into resistance. And again, Trendspider makes it so easy to put these lines in and say to yourself, you know what? Technically, I'm looking at resistance now at that 260 level. I may want to think about trimming this stock. And the algorithm helps you out. Because what does it do? It didn't tell you to get out at 260. I told you to get out at 260. But that 260 line, it is clear. The last time it went up here to 271. Did you get out at 271? I don't know. It closed at 248. That was a 5% drop once it got up there. Here, it got up to 263. Just, October 1st. What, yesterday? 263. Did you get out? I said 260 was going to be a resistance level. I would have probably started to get out at 250. Maybe, diamond hands doesn't always make you money. That little dude on Wall Street Bets, the diamond hands dude, he doesn't always make you money. It's not always the way to play it. If you have a stock like this that is going up and down by these huge amounts, trade it. Trade it. Now, when we look at a quarterly of Tesla, we can just look at a quarterly. Are you going up? Yes. Are you still in that bull market? It's questionable. This is going sideways. What happened last time it went sideways? From here, Q1 2014, all the way to the time when the Model 3 went out and they started making money, it traded mostly sideways. Okay, it's a big range. You're trading from about $10 up to $25. But from there, it shot up. It just shot up. Now, what are you doing? You're kind of just sitting there. Again, if you look at the quarterly charts, you can see the MACD is still extended. The RSI, you're at 56. It might not have pulled back so much. Your Bollinger Bands are cinching up. It's definitely going somewhere. So if you want to buy at 242, have a longer term horizon. But again, when you, and we talk about using the tools that you have. Trendspider is one of these tools. When you go and look at the quant, it's a hold. And why is it a hold? It's the valuation. Okay. We just heard their deliveries today. The PE forward. We talked about not buying Costco at 50 times. This is 111 times forward earnings. We talked about the PEG ratio of, even though I think it was Dell or something else, or Eli Lilly. We talked about the PE of Eli Lilly being huge, but the PEG ratio was good because their growth. This one doesn't have the growth. The PEG ratio is 8.97. That's enormous. So again, this one, that's why I say trade it. There's a masterclass right there. If you put all of this together and you take a stock in your portfolio and you look at the chart from a quarterly, from a 4-hour, from a weekly, from a daily, and then you go look at the fundamentals, that's how you value these stocks. It's not hard. And you want to make determination. Anybody can tell you, hey, this is a great buy, or you should sell this, or you could trade this. But we all have different risk tolerances. We all have different goals. We all have different time frames. So don't listen to somebody that says, oh my God, it's a great one. And again, I'd point out yesterday, I pointed to somebody who said, hey, is this one a good one? Well, go and ask AI, because AI has the tools that you're able to do. Use the tools that are in your toolkit. I have Trendspider, I have Seeking Alpha, I have Alpha Picks. Okay, later this week, I'm going to go over how I set up watch lists, where I put them in, how I organize things. I'm going to go over all of that stuff. But right now, you just have to make sure that you understand stocks. We're in this quiet period. Again, next week, Friday, it starts earnings. That's when shit starts to get really kind of volatile. During earnings season, you're going to see volatility. Right now, you're not seeing a ton of volatility. It's just based on oil. It's based on energy. It's based on Iran. It's based on the election. I think you're going to see volatility, but I take it back and we'll just wrap this up. Tom Lee, you're going to be at 6,000 at some point in time this year on the S&P. Buy the dip has always worked. So I'm going to name this Buy the Dip. And yesterday, Buy the Dip worked because we came back in the afternoon. If you have any questions, hit me up. Remember, everything is on the link tree. Even if you want my 4-hour algorithm to trade Tesla, you get it when you sign up for Trendspider. And it's $53 a month. Okay, click on that top link on Linktree. $53 a month. You just take a picture of your screenshot of your account and email it to me. My email is up here. You can always get in contact with me. You can always send me a message on Substack as well. Whatever you want to do. But again, for me, the 3 tools that I use, Trendspider, Seeking Alpha Premium, and Alpha Picks. It's as simple as that. And again, the reason I don't sell more stuff, I don't use it. I have 3 tools right now that I'm trying to use, one with options and another one. I don't use them, and they're not sticking with me. And so I won't recommend them. Now, if you don't have any charts and you don't have any interest, find free tools. I used FinViz for years for my fundamental stuff. I used Active Trader Pro on Fidelity. I use Thinkorswim. Those are free tools. Use the tools that are available to you that you want to, for me, the money that I spent on Seeking Alpha Premium, the money that I spent on Trendspider when I wasn't an affiliate, that was to save me time. And it's time savers. Now, you can get charts in Webull. I love the Webull app. Sign up for Webull. I put $1,000 in there. I think I'm heavily in Bitcoin and NVDA in that portfolio. Today, that's worth $8,600, $8,600. I think it was a couple of years ago that I put it in. But again, the return on that one is enormous. It's huge, but it's because it's risky. So if you have any questions, hit me up. Okay, take care. Goodbye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound.